Do you really think you need to be a genius to invest? Do you need a degree in economics? Or to spend your evenings solving calculus problems just to grow your money? If that were true, Wall Street would be filled with billionaires who can quote formulas, but many of them barely beat the market. And ironically, some of the brightest people, engineers, scientists, even PhDs, lose money faster than the average grocery store manager who simply sticks to common sense. So here's the truth. Successful investing has very little to do with IQ and everything to do with EQ. Not how smart you are, but how well you control your emotions. And Warren Buffett put it best: you don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with 130 IQ. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble. Today, let me share with you 3 simple yet powerful rules from Buffett that can completely change how you think about money and investing. These rules aren't complicated, but they're life-changing if you actually follow them, and the third rule is very important to take note of. Before we dive any deeper, stop for just a second and ask yourself this: how many times in life have you ignored the quiet, simple truths, only to realize years later that they were the very things that could have changed everything? Warren Buffett says the greatest investment you'll ever make is in yourself, but that wisdom only works if you actually pay attention to it. So don't let this be another moment that slips through your fingers. Hit the like button, subscribe, and turn on the notification bell. Not for me, but for you, because the next story, the next lesson, the next principle we share here might be the one that helps you finally tune out the noise, avoid the traps, and start building the kind of wealth and peace of mind that lasts a lifetime. Now that you've made that small but powerful choice to stay connected, let's keep going. Rule number 1: keep it simple. People love making investing complicated. They throw around big words, fancy charts, and computer models, half of which sound like a secret code. Why? Because complexity makes them feel smart. But here's the irony: the more complicated you make investing, the worse your decisions usually become. Think of it like dieting. Everyone knows the basics: eat more vegetables, cut back on junk, move your body. But people would rather chase magical diets with names like the Keto Intermittent Fasting Cabbage Soup Detox Plan. Investing is no different. People overcomplicate the obvious. Buffett's solution: stay within your circle of competence. That's just a fancy way of saying, invest in what you actually understand. Here's a simple test. If someone explains a business to you and you still don't get it, it's probably not for you. If you can't explain the business to a 10-year-old without breaking a sweat, you have no business putting your money there. And here's the beautiful part: you don't need to understand every company in the stock market. Buffett himself has said there are thousands of businesses out there, but you only need a handful that you truly get, run by people you trust. That's it. Think of it like relationships. You don't need to date everyone in the city to find the right person. You just need 1 or 2 who genuinely align with your values. Same with investing. Don't spread yourself thin chasing everything. Stick with the few you truly understand. After keeping it simple, you have to start thinking long-term. Now here's where most people stumble. Humans are emotional creatures. When the market goes up, we feel like Einstein. When it drops, we feel like fools. And that's exactly why so many investors do the wrong thing at the wrong time. They chase what's hot and panic when things cool off. Buffett once compared the stock market to a moody business partner. Some days he offers you a great deal. Other days he's completely irrational. Your job isn't to react to every mood swing. Your job is to calmly wait for the deal that makes sense. Think about it like owning a house. If someone walks by tomorrow and says, "I'll give you half of what it's worth," you wouldn't panic and sell. You'd laugh and shut the door. But in the stock market, people sell just because prices dip a little. That's not investing, that's gambling. Here's the truth: businesses don't change overnight. A great company doesn't suddenly turn into garbage because its stock dropped 5% this week. Likewise, A lousy company doesn't magically become brilliant because its stock price jumped. What matters is what that business will be worth in 5, 10, or 20 years. That's where patience comes in. Buffett calls compounding the eighth wonder of the world. It's like planting a tree. At first, nothing seems to happen. You water it, nurture it, and year after year it grows slowly. But decades later, that little seed becomes a mighty tree that gives you shade and fruit. The same is true with money. You don't have to do extraordinary things to get extraordinary results. You just have to give your money time to grow. But here's the challenge. We live in a world of instant gratification. One tap and food shows up at your door. Another tap and a stranger picks you up in their car. We're addicted to now. Investing laughs at that mindset. Wealth grows like a snowball. You start small, roll it down the hill, and over time it becomes unstoppable. But you have to keep rolling. Buffett put it beautifully. The stock market is designed to transfer money from the impatient to the patient. Which side of that equation do you want to be on? Rule number 2. Avoid big mistakes. Here's the part people often forget. You don't have to hit home runs to win in investing. You just have to avoid striking out completely. In Buffett's words, rule number 1, never lose money. Rule number 2, never forget. Rule number 1. Now, does that mean you'll never make mistakes? Of course not. Even Buffett admits he's made plenty. What it really means is, don't take risks that can wipe you out. Most disasters in investing come from 3 things: shortcuts, leverage, and emotions. Shortcuts. If someone promises you guaranteed riches in a short time, run. If it sounds too good to be true, it probably is. Chasing quick money is like trying to win the lottery. You might get lucky once, but odds are you'll go broke trying. Leverage, borrowing money to invest, can make you look like a genius when markets go up, but the moment they fall, you're wiped out. Buffett has said, you can't go broke if you don't owe anyone. Wise words. Emotions. Fear makes you sell when you should hold. Greed makes you buy when you should walk away. The best investors aren't those who never feel fear or greed, but those who don't act on those emotions. Think of investing like baseball. In baseball, you strike out if you don't swing often enough. But in investing, there's no penalty for waiting. You can stand at the plate all day ignoring bad pitches until the perfect one comes. That patience, knowing when not to act, is what keeps you safe. Avoiding big mistakes doesn't mean avoiding opportunity. It just means being selective and staying within your circle of competence. Over a lifetime, hitting steady singles and doubles will build far more wealth than swinging wildly for home runs and striking out. At the end of the day, Buffett reminds us that investing isn't really about money. It's about building the future you want. The money is just the tool. The secret isn't brilliance. It isn't luck. It's discipline. It's patience. It's staying calm when others lose their heads. And it's investing in yourself, because the best investment you'll ever make is in your own knowledge, skills, and ability to make sound decisions. Buffett himself has said, the most important investment you can make is in yourself. The more you learn, the more you'll earn. So remember, keep it simple. Think long term. Avoid big mistakes, and always invest in yourself. If you can do that, you won't just be a better investor. You'll be a better decision maker in life. Because ultimately, investing isn't about chasing every pitch or every trend. It's about building something that lasts, a future worth living. Here's a question for you. How much progress could you make if you stopped making avoidable mistakes and focused only on what truly matters? Avoiding the wrong moves is far more powerful than chasing quick wins. If that hits home, hit the like button right now, subscribe, and turn on the notification bell. Not for me, but for your future self. And tell me in the comments what's one mistake you wish you could go back and fix. Sharing it might just help someone else stay on the right path. And the very rule you should pay keen attention to is rule number 3. Avoid unnecessary risks. Most people don't want to hear this because it sounds too simple. They'd rather chase some secret formula or magic tip about which company to buy. But the truth? Nothing will pay off more in your lifetime than improving your own abilities. Stocks will go up and down, Markets will change. Interest rates will move. But the one asset you completely control is you. Think about it. If you had the chance to own 10% of the future earnings of any one person you know, who would you pick? You wouldn't choose the smartest person, or the one with the fanciest degree. You'd choose the one who is hardworking, disciplined, honest, and always learning. The one who shows up on time, treats people well, and has good character. Now here's the secret: you are that person. You already own 100% of yourself. So why not treat yourself like the most important investment you'll ever have? Investing in yourself. People spend endless hours searching for the right stock, the right property, the right big opportunity. But the highest return of all comes from improving your own habits, knowledge, and skills. If you improve just a little bit each year, your communication skills, your understanding of the world, your ability to work with others, the effect compounds. Just like money, knowledge and habits grow exponentially over time. That's why Buffett often says one of the smartest things you can do is learn how to communicate well. You can be a genius, but if you can't explain your ideas, inspire others, or persuade people, your potential will remain hidden. Communication is a career superpower. Then there are habits. The chains of habit are too light to be felt until they're too heavy to break. Good habits, saving, honesty, discipline, will carry you for life. Bad habits will drag you down, and the longer you keep them, the harder they are to shake. And don't forget your health. You only get one body and one mind. There's no trade-in, no upgrade. Protect them now, because success is useless if your health is gone. Finally, surround yourself with the right people. You rise or fall to the level of those around you. Spend time with people who are ambitious, disciplined, and driven, and you'll naturally grow. Spend time with complainers and excuse makers, and you'll slowly mirror them too. Remember, the best investments in yourself often cost almost nothing. Reading, listening to wiser voices, practicing a skill. Education doesn't end with school. In fact, the most important education begins after. And here's the beauty: once you've invested in yourself, nobody can tax it, steal it, or inflate it away. That wealth is yours forever. Tune out the noise. The stock market is full of noise. Every day someone predicts a crash, someone else predicts a boom. News, TV, blogs, even your neighbor. Everyone has an opinion. If you listen to all of it, you'll spend your life jumping in and out, stressed and never building anything. Think of it this way. Imagine you own a farm. Every day someone drives by and shouts out a random price for it. Some days high, some days low. Would you sell your farm just because of the number they yelled? Of course not. You'd focus on the crops, the productivity, and the long-term value of the land. That's exactly how the stock market works. You own part of a business, not a lottery ticket. The daily price doesn't change its true value. Noise makes people emotional. When prices rise, greed takes over. When they fall, fear takes over. Both emotions destroy wealth. The winners are those who keep emotions out of it, focus on what the business is really worth, and stay patient. Remember, the market is there to serve you, not to guide you. Like a partner who shows up every day offering to buy or sell, sometimes sensible, sometimes crazy. The secret is, you don't have to respond. The impatient investor listens to the noise, jumps in and out, and loses. The patient investor buys strong businesses at fair prices and simply holds. Over time, patience wins. In summary, here's the truth. The future is always uncertain. Nobody, not the experts, not the media, can predict where the market will go tomorrow, next month, or next year. Most guesses are no better than a coin toss, so don't let other people's noise control your future. Focus on what you can actually know, the quality of a business, its management, and whether you're paying a fair price. Strong businesses survive recessions, downturns, and headlines. If you own those, you'll come out ahead. The same goes for life. Tune out the noise, think independently, and focus on what truly matters. Because wealth, success, and happiness don't come from chasing noise. They come from discipline, patience, and time. Buffett said it best: You don't need to do extraordinary things to get extraordinary results. You just need to do the simple things, consistently, and let time work its magic. The world will always try to distract you with predictions and promises of quick riches. Ignore them. Focus on real value. Protect yourself from big mistakes, and let patience compound your results. If you do that, you'll not only build wealth, you'll also sleep a whole lot better at night. So let's tie it all together. The 3 rules we've explored today aren't flashy, but they are the backbone of real financial success. 1. Keep it simple. Don't chase complexity or try to outsmart everyone. Stick to what you understand and trust. 2. Avoid big mistakes. Survival is everything. Protect your capital. Avoid shortcuts, and don't let emotions dictate your decisions. 3. Avoid unnecessary risks. Focus on what you can control: your skills, your habits, and yourself. The most powerful investment you can make is in you. Markets will always be noisy. Headlines will scream. Prices will fluctuate. But if you focus on these 3 principles, the noise fades, and steady, long-term results follow. Now I want to hear from you. Which of these 3 rules do you struggle with most? Keeping it simple, avoiding big mistakes, or staying away from unnecessary risks? Drop your answer in the comments below. Sharing your experience could help someone else avoid costly pitfalls. If this video gave you clarity or perspective, hit that like button, subscribe, and turn on notification bell icon. Not for me, but for your own financial growth, so you never miss a lesson that could change your life. Thanks for watching. We appreciate you.